Carter Worth, let's talk about this mystery chart. You said the fix is in. By the way, the fix is 2 X's, great band. And one thing does lead to another. And so we'd like to talk to you. What?
Well, and we could stand or fall based upon this, Brian.
As soon as we reach the beach. Let's go to the mystery chart.
I've got a chart that's very relevant to this conversation, actually. And we're going to do 2 versions. We're going to do a 1-year chart of the mystery chart, and we're going to do a 1-decade chart of the mystery chart. So here is the 1-year chart, and it is a mystery chart. And let's look at, next slide, here is the 10-year chart of the mystery chart. And before we sort of figure out what it is, since all of you on the desk refer to and rely on charts on a regular basis, what do you think of this 10-year chart?
Well, if you're throwing it out, I'm sorry.
Yeah, you go. That's a 10-year? Who is that?
It's pretty nice.
It's a beautiful,
right.
I would say it's a beautiful chart.
It's a beautiful looking chart. Lower left to the upper right.
It's an equity, right? I actually don't know what it is. I have no idea. It's an equity, right? It's a stock?
So it's very relevant to what we were just talking about, and it actually is the best performing sector this week. Go figure, with the rates moving aggressively higher.
XLF.
It's XLU. That's
utilities.
The irony. Guess what's hanging in really, really well? Utilities. And I think that's an important message, meaning there are parts of the market that don't buy into the everything's okay message.
Carter, but if utilities are outperforming, a lot of the argument was they were certainly outperforming because we're in a low-yield environment. So if rates stay here, I get it. Do you think this is telling us where bond yields are going? Is this ultimately going to say we're not getting inflation? We're not going to go back to where the Fed has to be concerned about the long end?
I think you've touched on it exactly, meaning if we were really on the cusp of something sort of aggressive to the upside in yields globally, not only in the U.S., but all these negative yields going to positive or at least close to it, you would not get this kind of action out of utilities and even, frankly, gold. So there are parts of the sort of asset complex that are calling out the so-called notion that rates are going meaningfully higher.
All right, Carter, why don't you come on back to the desk and let's trade this around. I mean, here, the utilities have been a spectacular play, obviously, Guy Adami. I mean, I'm old enough to remember when the utilities were a place you hid. If you were afraid for other things, you went into the utilities, regulated business, slow to no growth. You just wanted the cash flow. Then suddenly they become this wealth creator.
Makes you wonder, when a Con Edison is up 1% on a day like today, it's off its all-time highs, but not that much off. Ridiculous valuation for that kind of company. But to Carter's point, I mean, here's a decent day in the market, and Con Ed's up 1%. It doesn't make a lot of sense. TLT's up. I mean, listen, I'm with Carter on this one. I'm probably one of the few people that think rates are headed back lower. But we'll see how it plays itself out.
What's interesting is we've seen during periods of risk aggression, though, that actually utilities haven't been a place to hide, especially because they've been in a short run. Carter's chart shows that eventually you get back into that trade and maybe there's a bottom end of a channel. But because they've been so defensive, they're not terribly defensive even on at least the first part of those worst days. What I would say about other places, though, that are interesting that would certainly counter that trade, and the jury's absolutely still out, but talking about transports and thinking about the pressure on the transports that have come from FedEx and even a Boeing, and the fact that the transports still are trying to break out even with those 2 headwinds.
You know, there's one company, Duke Energy, it's up 5% this year. The rest are up 20, 30, even 40%. Duke has a dividend yield of 4.17%. They're obviously, pushing that yield out there to bring investors in. It hasn't participated. Any reason to maybe play the sort of the dogs of the utilities, if you will?
It's a top 4 in the XLU. It's about a 7% weighting within the XLU. But I push back on that a little bit because utilities can pass on. You need lights. You need everything that they supply, even when rates rise. So it has been defensive. And I think there's a lot of things to be defensive about within the market. But I don't think you should read anything further than rates and
do we still buy them here, Carter? Do we buy them?
I think so.
Yeah, look at that chart.
That chart. And the short-term chart hasn't yet made a high. I think you're breaking out right now. And the fact that you're up #1 sector on the week when rates really punched almost to 2%. There's a
Didn't he have anybody? I'm putting you all on the spot.
87.5 in Duke Energy is very interesting. It bottomed out there recently, made a similar bottom, I think, 6 or 7 months ago. You trade against that. And in the great words of a great movie, Brian, it was, in fact, the Dukes. Do you recall that?